join the map. This is Ron Costa broadcasting live from the Mappable USA studios in Las Vegas, Nevada. And today, folks, we're going to talk about a real estate concept here that's getting very popular. You're going to want to hear this one. But before we get going, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you today?
I'm fabulous today, Ron. As always, Vegas is great. You know, we're happy because it's only going to be 100 degrees today as opposed to 112, which always makes us happy. But we have one of our a guest that we've had on before, and he's going to tell us some interesting stuff, like you say, about real estate and investing. So I think we should get started.
Excellent. Let's get him on now. Folks, let's say hi to Ryan Garland. Ryan's the CEO of Paradyme Investments. Ryan, how you doing today?
Hey, Ron. Good. Thank you very much for having me on. It's an honor and a blessing to be a part of your guys' podcast again.
We always like having you on, Ryan. It's funny because the last time we had you on, you were on the West Coast in Temecula, I believe. Is that right? Now you're somewhere else?
Yeah, we actually in the beginning of the year 2022, we decided to make a shift and move our headquarters to Nashville. So we are now in Nashville.
Wow.
Excellent.
Different from California to Nashville. What a change.
Yeah, definitely. You know, it was definitely a culture shock, I think, for any company to make a move, even for a family, right, to kind of move, across the country, if you will. But from a business side, the collaboration from how fast that area is growing and how many, business executives in the private equity world are leaving New York and Chicago and, all of that robust capital coming in there, it really kind of aligned with our brand. So we felt that it was a good business move overall, kind of even, considering all the economic changes, at the same time. So a lot of boxes were being checked before we made that move.
Yeah,
but
absolutely.
You still have a location in California as well?
We do, yeah. So we're still in Temecula, and I actually have two kids in high school. So really what we're doing is I actually had an executive move out there to manage the office and the branch there, but I am going to be traveling back and forth and spending time with my kids, and I'm going to wait until those two graduate, and then I'll probably make the move, my wife and I, out to Nashville full time.
Excellent.
Yeah. No, sounds good. Sounds good. And speaking of your company, Brian, sorry, Ryan, we had you on previously, and maybe somebody didn't hear about this. Maybe you can give us a little bit of your background, perhaps, and what Paradyme does.
So really, we're kind of it's kind of hard for you to explain. I have a pitch deck, I think, that explains it a lot better. But really, what we've kind of morphed into, I'll talk. Prior to 2008, I was in the civil engineering world. Ended up quickly moving into realizing I don't really fit well into a cubicle. I'm more of a people person. So had some friends in the traditional mortgage space, converted into traditional mortgage. Found out that I could make a pretty good living there, so stayed in it. 2008 happened. Everything hit the fan, if you will, and decided to get into more workout turnarounds. Just the kind of door opened for me. So I got into more of the private money lending space. Met with some high net worth guys that were lending out first trust deed mortgages and had a really long track record of creating wealth during a downturn. And so I kind of stepped into that arena. And over time, over the past 10 years, we ended up monetizing into kind of a syndication company, kind of with the day and age and having a social media presence and a big following, and then kind of creating a niche in the private sector as far as financing. We ended up launching a full-blown crowdfunding company. So I actually raised an A round and expanded my company and have a big marketing team and a big presence. We have about $450 million, give or take, on the platform right now under construction and that we're syndicating for. Projects between apartments. We have some hospitality, build-to-rent communities. We have a 45-unit townhome project we're just completing right now in a little city called Lakewood outside Denver, apartments going up in San Antonio, and a winery here in Temecula, California. So we have 225,000 square feet of boat and RV storage actually breaking ground today in Lake Havasu, Arizona. So we've been able to really kind of scale a private equity firm to allow either kind of a smaller investors to start dabbling into real estate investing, right? Kind of diversifying their wealth and their investment portfolio, all the way down to, high net worth individuals working with tax strategy or what have you to try to start parking the money into the real estate asset class to create wealth as well. So we're kind of spread out, if you will, but we know our lane, which is real estate.
And so how do you think real estate is going today with the economy and the trends in real estate? Where do you think the best investment is, or what type of real estate are you focusing on now?
Well, it's funny. If you asked me this about a month ago, I'd tell you that's a loaded question. I think we all are starting to realize where the market's going to end up going, and really it's unfortunate for a lot of people. I think they're going to be hurt, but at the same time, on the upside, for anybody who is, saw what happened in 2008 and positioned themselves differently and have been very conservative through these times, this is when you can create a significant amount of wealth. I'm forecasting, and this is not just my understanding, these are other people that I look up to in the industry, other analysts and other, big companies, and watching what other, Wall Street real estate divisions are doing and maneuvering to. In regards to what I think is going to end up happening in the industry, you're going to see a big shift from an investment mindset into stuff that's more affordable, right? Attainable, affordable housing is probably going to be a really smart move. Or even first trustee mortgages. You're seeing a lot of investors feel more comfortable in the security instrument of trust deed investing through private money. Or build to rent communities, apartments, or so forth, right? Those are going to be probably the most desirable asset classes moving forward for the next 5 years.
And do you have any projects that are specifically build to rent? That's a new trend in real estate now, building to rent. And how do you approach that?
Yeah, so the build to rent is definitely something that I've dug my heels in pretty heavily. I actually have a gentleman on my advisory board that manages a large advisory firm that really dove into this about 2 years ago. And as I started digging in, I realized how not only profitable it was, but how it made sense from so many different vantage points. And right now, in fact, when we decided to make our shift to Nashville, just like any executive, before an executive or any company really typically expands into an area, you'll have one executive or so from a company kind of go out there and start kind of getting the lay of the land, start building relationships, and kind of shotgun yourself into, possibly, kind of eventually start converting, cash flow for the company when you maneuver into a new space. When we moved into Nashville, within 6 weeks, we were introduced to a developer that had 43 acres of entitled property for 120 units of townhomes in Clarksville, just outside Nashville, kind of a secondary affordable housing, big military area, very big into workforce, if you will, and robust, booming, big corporations and employers are building big industrial buildings there and what have you. And so we started looking at that development, and so we actually decided to go in and partner with them to build 120 units of townhomes, build to rent. It's a 10-year investment. And in fact, we should have plans approved in the next 4 weeks. We're going to go ahead and continue to move forward with that.
Excellent. Outstanding. That was a good move then to Nashville, because, boy, it started hopping as soon as you arrived in town, Ryan.
Well, Nashville, because it is booming already, it was just the energy of that market, right? So as soon as I got into town, the collaborative nature, that Southern hospitality, I tell everybody it's a real deal. And when you have an area that's just booming like that, everybody's on fire. And so at that time, it's really about aligning yourself with the right people, finding the right synergy, and marrying up those two brands to successfully, make a living, right? And so that's what happened. And I think one of the reasons build-to-rent communities are so popular are a couple different things. Number one, most people are very concerned with building costs, right? Construction building costs have gone through the roof, right? Well, when you use residential construction trades and methodologies for development on the residential side, it's typically cheaper than it is on the commercial side. So to go with an apartment project that's, pick a number, 3 stories, you have a lot more engineering, a lot more material that you got to use to develop, and it is a commercial trade. So that cost is typically going to increase. If you're able to financially model a community that is very much like apartments, a for rent product, but you're able to deliver a more desirable unit that is,
right.
in some cases, 2 to 3 areas have, walls have, light, right? And then you also have a little bit larger units with a little backyard, maybe a 2-car garage. If you're able to compress your costs to match other product out there that is an apartment, a regular standard commercial apartment, and you're able to be real close in your rent costs, that is going to be a more desirable asset for people that are looking to rent to go into, right? And it's a new product, raised ceilings, all that new technology that everyone's putting into these developments, health and wellness, dog parks, pools. It's just a much more desirable asset for people to want to rent out. So you typically start showing better. Now, one of the coolest things that I like about that product is the fact that if you think about it, right, if you build a big apartment project, just to pick a number, say you build 100 units of apartments. When you go to sell that development, you have to sell the whole development, right? So you have just pick a number, you have a $50 million ticket at the end, right? So how many buyers are out there that can afford $50 million? Now there's a lot, but your buyer's pool is much smaller than having the ability to sell each condo or townhome, each unit, as a regular single family home. A lot more finance options, a lot more buyers. You have a lot of people, baby boomers 1031 exchanging, looking for rentals and cash flow. You have a much larger buyer pool. So if you have a lot of partners and investors, you can model this out where you sell, pick a number, 75% of those 100 units, and then all of the debt is paid off. And then the rest of those 25 units, 25%, is all cash flowing paid off units. So it's really pretty neat on how, just from almost every perspective that makes sense right now in the marketplace, how those build-to-rent communities have really are shining very well.
Yeah, it follows the trend too, because it appears that in today's society, a lot of younger people aren't looking for buying houses so much as they're looking for a small, economical location that fits their needs and is specifically set up for technology and, like you said, the dog parks and the pool and, the sociability of it, but they don't need a 28 square foot home. They're happy with 800, 1,000 square feet, and that's perfect. Rent to own makes it perfect for that.
You nailed it. Well, I'll give you some real data. So, as I was mentioning, I have kind of a crowdfunding department, right? Well, we got to a point where we were, at some cases, we're paying $2,500 a day in ad spends on social media to drive investor traffic to our offerings, right? And I have a whole investor relations team that would actually call these investors. So they'd come into our CRM, we would contact these investors, send them more information, what have you, and we would start collecting data on their trends, their desires, how old they are, kind of like all of the metrics for us to continue to drill down and target market the right people that'd be interested in certain offerings. Well, you nailed it. The younger generation isn't necessarily interested to just buying residential properties. A couple different reasons. Number one, they're, not right now as of today, right, as far as, June 21st and the market crashing in crypto, but there were other vehicles, over the last couple of years where you could make more money on investments. And because of that younger mentality and mindset, people were investing into crypto and, tripling their principal within, a handful of months. So it was kind of one of those things where you had a lot of investors, younger generations, looking at other vehicles to invest into and just didn't really see real estate was viable. At the same time, some of those younger investors also don't have the money that's needed to start playing ball in real estate investing either. So by dabbling in maybe a $5,000 investment, $100,000 investment, or sorry, a $1,000 investment, what have you, that was helping people start getting into the investment sector. So you nailed it. You have the younger generation that was more looking for the flexibility of being able to move, the flexibility of just kind of getting in and out of something they don't necessarily need to be tied to, and was a little bit lower cost of living, but more desirable, more space for maybe an at-home office, for people that work at home and what have you. So that product really seems to be kind of nailing a lot of good points.
Yeah, Ryan,
exactly.
when I look at build to rent online, if I go to Google, for example, and I search out that term, there's so many results that come in. It's a very, very big trend right now in real estate. But when I look at those results, to me, it seems like almost anyone can do this, right? But from what I'm getting out of this conversation so far is build to rent is more of a concept for like mid-sized to top developers. Is that a good take, or can anybody? Is this for anybody? The strategy.
Well, so you have the build to rent is really a mentality, meaning you have guys that are smaller. Let's just say a smaller developer, which we lend out money on private funding for construction financing too, but smaller residential fix and flips. But you'll have guys that are building, two units, duplexes or maybe fourplexes, and they're building them and then keeping them to rent. So they're doing the same thing. The mentality is build it to rent it, right? So you can, the real build to rent, like if we were to sit down in any big room with maybe some executives and you talked about a build to rent, they're automatically going to think of a community like you and I are talking about, 120 units, a larger scale apartment, like financially modeled community. Yeah. Yes. But when you work with, kind of the build to rent model, it does have that mindset of you build something new, it's a newer product, it's more desirable. Depending on the finishings, you can compress your cost. It's going to be more desirable given maybe the area that you're developing. There's maybe not be, any other competition, and that will rent up and probably show real well, right? And it'll cater to the demographics of the area. But the build to rent is more of a mindset. So yeah, I mean, almost anybody can really get into it if you're really kind of dabbling in real estate investing. And I think you're going to see that become even more popular right now. Again, as of today, you're going to start seeing a depreciating real estate market. So fix and flips won't be as desirable. But because you have a downturn, you're going to automatically rentals will start coming out, right? And people go, well, shoot, I'll start buying at a good price or creating margin by building new. And then I'll just rent it out and create cash flow, and I won't have any shortage of renters. I could probably do pretty well there.
Well, right. Like here in Vegas, there's so much development going on, single-family homes and all these complexes, the KB homes of the world. They're putting them up overnight. Mm-hmm. Is the strategy for a lot of these guys, like somebody like myself, small-time investors, say, hey, I'm going to go to KB. I'm going to tell them, yeah, I want a brand-new home with the intent of renting it out on day one, right? I mean, that's a strategy a lot of people are using, right?
Yeah. Well, so like one of the most popular, financial requests that we get for a loan is like short-term rentals. Now I know it's a little different in Vegas for, Airbnbs, but yeah, I mean, when you look at just that Airbnb market, I have borrowers that are going and working with national builders, D.R. Horton, KB Homes, Pulte Homes, and they're buying homes that are kind of located to like some sort of, whether it's a lake or, next to the ocean or whatever the case would be, right? Where people are saying, I can buy this thing at full pop and I can cash flow it, either whether it's through rentals or like long-term rentals or short-term rentals, Airbnbs. Exactly. And what you're realizing is a lot of investors are a lot of the baby boomers right now that are in retirement mode and are rolling that 401k money, and they're moving them into IRAs. 1031 exchanges, they're selling assets looking for cash flow, they're moving out of state, lowering their overhead, they are looking for cash flowing assets. So you're seeing that long-term rental mindset is becoming more popular. And again, baby boomers, the ones that actually have money right now, they're the ones that are going, okay, I don't know crypto, some stocks I don't know about, everything looks really scary at the moment. But I understand and realize know real estate that it does go up in cycles. I can at least leave this to my family and my kids while I generate some cash flow to survive. Because at the same time, and I don't mean to go into a tangent, but medical costs are going up, food costs are going up, inflation, everything. And that's really the way to hedge against inflation has always been real estate anyways.
Well, yeah, that's true.
So then, okay, and again, getting back to this whole strategy of build to rent to begin with, from a very, very top level, does the build-to-rent developer or the investor or whoever you want to, is actually going to buy the product, are they thinking of getting renters first, or are they thinking of closing on having the property ready first, or is it a simultaneous kind of thought?
So, like, if you have a larger community, you typically want to bring in like a really big property management team. Depending on the area, sometimes you'll have maybe the largest property management company in the area, or maybe a national company. Again, it all depends on the location. But typically what you want to do on a big project like that, time is everything. I mean, time is everything when you do a larger development, really in real estate development, period. but you want to start getting in front of renters or possible renters rather quickly. So when you have a really big company that has, in essence, a big CRM, a big marketing budget, you could typically get those firms to start engaging, 4 or 5 months, 3 months maybe, depending on the area, to start marketing for renters prior to them getting their certificate of occupancy and completing, which is ideal, because then you're like, okay, we've already got the lease in place, we got a deposit down, and in a month when this thing is completed, they're moving right in and we're cash flowing. That would be ideal for anybody. But again, it depends on the area, it depends on the amount of units that you have, and depends on that builder, their confidence in even delivering the product on a timely manner. The last thing you want to do is go out there and start marketing, you're not delivering the product. So that also typically kind of marries up to, building material bottlenecks and so forth. But it does change. It's every developer, every area is a little bit different.
Right, and now we're talking about basically single-family homes and that kind of product. But what about other commercial assets, so like warehouses and things like that? Or you mentioned self-storage, RV storage before. Is that a candidate for a build-to-rent strategy as well?
Well, so you'll like this. So one of the biggest trends on the boat and RV storage is the fact that I condo mapped these entire projects. So each unit is for sale. So when you look at my cost to build, and then you look at the demand for people to park their, some of these rigs are getting pretty expensive, these RVs and some of these people's boats, right? Especially in this particular location. So, you can buy a larger unit, put your own toy in there, and then rent out maybe the other space that you have in there to other people that may possibly want to, leave their product in there. And you can actually cash flow that. So what we're seeing is a huge buyer pool of 1031 exchanges. So you have people that'll have maybe $100,000 or $150,000 in a 1031 deferment vehicle that they're looking for, and they'll come in and buy those. And that's actually a big thing. For example, for me, I'm actually going to take over one of the largest units there when I'm completed, and I can rent it out to 3 or 4 of my buddies, put their boats in there, and I would cash flow this thing like $1,500 a month. And so you can actually do pretty well depending on, the asset class and the area, again, and the demand. But, for like an industrial space, depending on the size of the industrial space, typically you want to go get a commitment letter. Again, it all depends on the size, from a tenant to go into it, right? Or unless you're an owner operator and you plan on moving your company in there and what have you. But yeah, the industrial space is definitely kind of a different animal, but the idea would be to always try to get tenants to go into it before you're completed.
Exactly. Wow. And you mentioned RV storage and that in Lake Havasu, and we have a friend in Lake Havasu who does exactly that thing. And he owns Riverbound in Lake Havasu. And it's exactly what you described. He sells the lot, he builds the building, and a lot of these people either live there while they're boating around, RVing around, or they're renting it out. So it's like a win-win for everybody. In the storage,
and it's kind of cool
total
because
different concept.
Yeah, and he's got a good product too. I really like kind of what he did.
It's excellent.
And that's identical to the most part what we did. They're basically man caves, is what you're doing. You can custom design them. You could put lifts in there, tools in there, full kitchenettes, full offices, bathrooms, showers. I mean, it is a pretty cool little concept, right? And so when you look at the trend, and I know we're going off basis here, but when you look at the trend and the demand of, so for example, on RVs, RVs were kind of, let's just be candid, right? We're kind of being seen as the average buyer pool is more of the baby boomers. Well, now, over the last 5 years, if you look at all the other generations that are buying, it's not just the baby boomers. You're seeing a lot of Gen X and even millennials are buying fifth wheels and boats. And, and with all that money getting pumped in with the stimulus package, a lot of people were buying toys, right? And so the demand and desire is that. But that's also in line with lifestyle trends. People don't necessarily care about having that big house anymore. People want toys. People want cars and boats, and they want the next social media post, But if you can marry up with real estate and make money, then it's a win-win, and that's exactly what you're seeing in that asset class.
Exactly. And not only that, but once you reach the baby boomer kind of stage of life, you've been there, done that, done everything, and now you just want to enjoy what you're doing. And how better to enjoy that than with RV, being at a lake, going here to there, and storing your toys, as well as living where your toys are being stored. And you can create a whole community of people to build interest. Like you say, it's a win-win, and it's kind of a cool concept.
Yeah, really
and even on the go ahead, Ron.
I was going to kind of change the subject a little bit to get back into the build to rent topic a little regarding some maybe market research, because obviously the build to rent concept works in areas of the country that are growing, or more people are moving to, or want to live in, right? So, what do you guys do for that kind of analysis? As far as, and what would you suggest somebody to do if they're interested in getting into this whole strategy concept?
You know what's funny is I get the same question a lot, and I tell people I dumb it down and make it as cheesy as this, right? When you see Wall Street pivot and you see big firms pivot and they're buying up these type of products, it'll catch your attention going, okay, what are they seeing that we're not seeing? Now, elephant in the room, recession, right? What's that do? That basically means that a lot of wealth is going to be lost and people are going to have a problem the affordability is going to be an issue, right? So what happens is the build to rent community just on the East Coast alone, Blackstone just a few months ago bought $5.4 billion in build to rent communities, 44 communities. Some of them very smart. They also had kind of like the retail on the bottom, maybe residential, more high dense areas where it was anchored by a grocery store. But a lot of them were build to rent communities. So between apartments and then communities like these single family asset classes. But what I'm realizing is, when you see the data from remember I was saying that it kind of checked a lot of boxes. When you see what's going on in the economy overall, and you see where the workforce is going, and you see big employers like Amazon or Facebook or those big employers building and developing out there, that kind of lets what workforce is going to be needed. And so you can kind of start developing your project around there, and it really becomes easy, because if you look at what the average income is in the city and the density and the demographics, you kind of it's just a kind of math. It's simple math. You need to back into, what kind of product you need to build at what cost, according to what people's debt to income ratios would be in the affordability side. So you do need to kind of consider a lot of things. But again, looking at a lot of these big institutions, dumping billions of dollars into buying these products really caught our attention. Now, I'll say this before I open it up again. But we're developing, and we haven't even broken ground yet on our apartments in San Antonio. We were contacted by some large REIT fund managers saying that they wanted to have us stay in on this project. Now, get this. They wanted to buy the project from us at what we're asking for it right now. So once it's built and completed, they're saying, we'll buy it, we'll give you a guarantee to purchase. But we'll buy the land right now. We will buy it all from you right now, but we want to hire you to keep the development going, because obviously we're working with the architects and engineers and we know it so well, right? So it's smart for them to keep us involved to build this and complete it. But they're saying, hey, we'll pay for the land, we'll put up all the construction dollars, we'll do everything in phases, and then at the very end, once it's leased up, we'll pay you what you wanted for it. And they're trying to lock us into contracts. Now, that told me the amount of dry powder that's out there for investors looking for these asset classes, Yeah.
Wow. Yeah. Well,
Ryan,
that sounds like a Yellowstone episode where you just described.
Yeah, it's pretty impressive. So you kind of have to consider going, should we do that? Or is there something that we don't know? We could probably make more money if we don't accept this offer, right? I mean, for it to be that aggressive, we haven't even built. I mean, we're fully entitled. Plans are, we've already gone through the first round of comments, but we're going like, hold on, these guys want to buy this thing at full pop right now and then pay us now for what our basis and what we have capital in it. So I actually consider that, going, hey, if you could pay my investors the returns that I projected to them now on their principal, I could roll that capital into another investment for them. I'll finish this project, make management fees, and then go do another project. I mean, it's pretty impressive what's going on in the industry.
Hey, it's right.
That is very.
Yeah. So Ron, I have one more question before we kind of close this out, and it has to do with mortgages or interest rates. You know, they're going up. Is there a point where the interest rates are going to rise to a factor where it won't be worth it to build to rent? You won't be able to pencil it out?
No, I think it's going to open up more doors for rentals. Is what I am concerned about is recently the cap rates are starting to climb, which means less favorable for developers, right? Because affordability is going to be an issue. I think, you know, for us as an example, and I say this respectfully to the working class, I feel that this recession or inflation right now going into this recession, I think we all can admit that we're probably in the first beginning stages of a recession. Right now, our interest rates are identical at the highest peak of 2008 crash, okay? And if they're talking about the Feds need to come in with another 0.75 of a point, 75 basis points next month, and then they're talking about another rate hike in September and October, and Goldman Sachs just announced that they think that there's going to be 18 more hikes. I don't believe that.
That's incredible.
That's impressive. So what I'm thinking you're going to see, and if you look at, big analysts, I mean, these are big, Fortune 500 companies, 76 or 77% of all Fortune 500 fund managers and company CEOs are all stating that they're bracing for a recession. And what's happening, in my opinion, is that the Feds, I think, are going to have to spike rates up to another 3%, which means if you're at 5.875 now, that's close to 9%. And if you look at 9% rates, that's 80s level, interest rates.
Yeah.
That crushes the affordability of housing. So therefore, the only way, with all the other inflationary areas going, cost of living from fuel to food, which is another problem. And respectfully, and I don't mean to go on a tangent, but Russia is showing really well against Ukraine. What's that going to do, right, to all of our goods and transportation and getting stuff from other countries? That's a problem. You also have the bottleneck of, China still being under COVID lockdown. That's going to be a bottleneck too. You have all these issues with farmers not being able to produce, and the administration is paying farmers not to produce food and farm. So we're going to have, I think, a really, really hard time here in the next few years. I think we're going to be in an 18-month downturn minimum, unless the administration starts doing something about it. But if we're in the same lane that we are now, we're going to have a problem. So I think you're going to see a depreciation in homes, which is going to open up doors, though, for people that are prepared for it,
Yes.
To create some significant amount of wealth. I think probably at this point, if you're positioned well as an investor, first of all, get as lean as you can, stop, sell all your toys kind of thing, and get some dry powder, because when you're on a down market, cash is king. You'll start buying up some stuff and ride that wave. So I would, I think we have some rough times ahead of us, and I think that you're going to see a depreciation in the market, probably anywhere between 20 and 30%, and single-family home values in certain areas. I don't think you're going to see like certain areas like that are booming, like certain parts of Florida and outskirts and Nashville not necessarily get hit so hard. Those big migration areas I don't think are going to get hit as hard. But when you have an affordability problem and your biggest generation is baby boomers that are all going into retirement with increase of healthcare costs, they have to migrate to survive. So people are not going to necessarily want to leave California weather, but they're going to have to, if you will.
Right,
Yeah,
to be able to survive.
A lot of people may be confused about all this information, Ryan, but the good news is that they have you, right? And if they want to do a build-to-rent, you have build-to-rent funds, I believe, or some projects that are out there.
That.
Right? If somebody wants to get a hold of you, how would they do that? For more information.
So basically, number one, you can go to ParadymeInvestments.com. We spelled it a little differently, Paradyme, investments.com. All of our contact information is on our website. It also gives you the ability to kind of dig through some of our offerings and see what we're doing as well to pivot around, these uncertain times. But that will give you a deeper dive into this particular build-to-rent asset class, and then our other investment vehicles that we have too, to see if this is something that would fit you. But, all of our contact information is on there, and you can reach me right through there.
so many people want to get into real estate and deals like this, and they don't have the background or the confidence that they can do it, and they get scared. It's nice to know that there are syndications out there, such as yourselves, that can do that. And you get a little bit of a good feeling saying, okay, well, I'm investing money with people who know what they're doing. So I think the whole idea of what you're doing is great. I love the build-to-rent concept. As long as you have the backing behind you, you know what you're doing. And I think this is a great thing. Vicki, what do you think about this podcast?
Oh, my God, Ron. I think you remember when we first met, Ryan, at the OZ Expo here in Vegas, and I told you then how impressed I was with you and your team and the integrity and the approach that you have. It was just so impressive to me. And now after this podcast and listening to where you've come in the years since that happened, oh, my God, it just reinforces how impressive you are, Ryan, and Paradyme, and I just can't tell you enough. Congratulations, and I wish you the very best of luck in Nashville.
Oh, well, thank you so very much for the kind words. It means a lot. And we take our what we do for a living very serious, right? Because we do have an influence on people making decisions with their money and their retirement money. And so, me on a personal level, what I tell everybody too is investors don't necessarily invest into the specific deal. Yeah, all the boxes have to be checked, but investors invest into the people that are managing these developments and investments. They invest into the firm is really what they're doing. And so I think for me, I try to be as transparent as I can and give kind of that red carpet feel, because the idea is for me to just talk openly about my projections of the industry, what we're doing to pivot around any adjustments, and hence the name Paradyme. And then, what is I'm doing on a personal level. And I think people kind of go, well, if he's doing it personally, he's foreseeing something, and I think that we're in a safe bet. And that's kind of the key, to lower our overhead, utilize systems and technology the best we can to minimize our overhead so we are more efficient on getting the job done once we've syndicated a project. Be more forward-focused than fund managing. We already have the CPA firms and the tax guys to deal with that. We brought those right guys on. But be more forward-focused on making sure that the asset gets built, because that's where we make the money, right? So it means a lot to me. Thank you very much for the kind words. And again, it's always an honor to be on your guys' podcast, and I'm hoping that whoever listens to this finds fruit and, feels good about the direction that they decide to go moving forward.
Oh, excellent. And it's always our pleasure to have you, Ryan, because you just do so much. And like you said, it comes from the heart, and people can see that and they can feel that and hear it in the podcast. This was a great podcast, Ron.
Absolutely. Yeah, it really was. And thank you, Ryan, again, for being a guest on the show. Vicki, thanks for co-hosting this episode. And folks, you're listening to the Mappable USA podcast at MappableUSA.com. Go to that website, scroll down the homepage. You'll see all our syndication sources. You just pick the one you like the best, subscribe, and you'll never miss another one of our episodes. And if you want to be a guest on the show like Ryan was today, fill out the guest tab there, and we'll see what you do about getting you on the show. And lastly, if you like what you heard, send us an email. Tell us how great we are, and send it to info@MappableUSA.com. And thank you once again. Thanks for listening. Thanks for your support. And we'll be at you next time with another Mappable USA podcast. Have a great week, everyone.